Hello and welcome to Rural Community Assistance Corporation's virtual Start, Grow, Revive Your Business Workshop Series, Module 8. My name is Madison Wilhite, and I'm the Community Coordinator at the Native American Development Corporation. We would like to take a moment to recognize our funder, the U.S. Department of Commerce Minority Business Development Agency, for their generous support. The virtual SGR workshop roadmap has provided an overview of the concepts and tools we've covered as part of this workshop series. Today, you're at the end of the SGR workshop roadmap. You did it! You completed the series. After you complete Module 8, you are ready to begin your journey. Congratulations! In this module, we will know how to pull a credit report. We'll know how to address issues on our credit reports. We'll identify the next steps towards startup and expansion, and we'll showcase your progress to date and next steps. In this module, we'll explore qualifying for a loan, we'll preview the financing panel, introduce action planning, and we'll take a sneak peek of graduation. And finally, we'll look at next steps to help you be prepared for the following live session.
Now, we are going to dive into the specifics of what lenders look at when you apply for a loan. The 5 C's of credit is a framework used by lenders to evaluate small business borrowers when they want to borrow money. The 5 C's of credit stand for capacity, character, capital, collateral, and conditions. Each of the C's affects your ability to qualify for a loan and the interest rate you'll have to pay for that loan. We'll talk a little about each C, but as a reminder, our CAC's Initiate platform is a great resource for you to dig deeper on your own. Capacity means your ability to repay the loan. You might hear a lender talk about a debt service coverage ratio. This sounds complicated, but it really isn't. Lenders just want to make sure your business generates enough cash flow to repay the loan in monthly payments. Most lenders require a 1.2 or a 120% coverage ratio. This means if your loan payment is $1,000 a month, you have $1,200 left over at the end of the month. Lenders want to see that you have more money left over than you need for your loan payment because sometimes there are unexpected expenses. If you don't have this type of cushion available and something goes wrong, you might not be able to make your monthly payment, which can cause trouble down the road, especially if it happens more than once. Lenders require this type of cushion for everyone as a way to protect their investment, and it protects the borrower also from taking out a loan they can't afford to repay, unless everything goes perfectly, which we know rarely happens. While capacity is about your ability to pay the loan back, character is about whether or not you'll actually do it. So to measure character, lenders look at your credit history and your track record as a borrower. Specifically, the total amount you have borrowed and you owe, your on-time versus late payments, and any collections, liens, judgments, or bankruptcies. Character is typically measured using your credit report and your credit score. Your credit report is a record of your history managing and repaying debt. It works as a kind of a report card that lenders review when considering whether or not to give you a loan. There are 3 credit reporting companies that keep track of your credit report and your credit score: TransUnion, Equifax, and Experian. Everyone is entitled to a free copy of their credit report from each one of these 3 agencies once a year. To access a copy of your free credit report, go to www.annualcreditreport.com. Once you get a copy of your credit report, you'll want to review it for errors such as paid accounts showing as unpaid, duplicate information, unauthorized inquiries, or items listed for far too long. If you do find any errors, it's important to address them. You can find more information about how to address errors in your credit report on RCAC's Initiate platform in the Personal Credit section. A FICO credit score ranges from 300 to 850. The better your credit score, the better your chance of qualifying for a loan and receiving a lower interest rate. This can save you a lot of money over the life of the loan. Your credit score is based on several factors. Your credit utilization, which means the total amount of available credit that you are currently using. This is measured as a percentage. If you have two credit cards that together have a $5,000 limit and you've used $4,000 of that, your credit utilization is 80%. Lenders want to see that you use less than 30% of your available credit at any given time. Your payment history is whether you pay your bill on time every time. Missing even one payment or paying more than 30 days late can affect your credit score for at least 3 years. The types of credit you have relates to if you have credit cards, a car loan, a student loan, or a home mortgage. The length of time you've had credit means how long you have established yourself as a responsible borrower over time. If you just opened a credit card last week, it will not look as favorable as having that card open and paying on it for 10 years. And recent credit inquiries means that lenders want to see how often you have applied for credit within the last 2 years. It's a good idea to be careful about how often you are applying for credit. As a reminder, RCAC's Initiate platform is an excellent source of information if you would like to know more, including resources on monitoring your credit score and tips for improving your credit score. We are not professional credit counselors, but we are here if you have questions and can connect you to credit counselors if you want more information. The third C is capital, also known as equity. Back in Module 7, we talked about equity in the Funding Your Business section. Capital is the amount of assets you have available to help start or expand your business. When we say assets, we are talking about cash, equipment, and/or inventory you'll use to launch your idea. Banks require owners to invest some of their own money into the venture, as this shows you have some skin in the game. This also ensures you are less likely to walk away from your business if you start having financial issues, because you'll lose your own money too. Collateral is what lenders use to secure a loan. It's what helps protect the lender in case of default because it provides a backup if the borrower cannot repay the loan. The lender can repossess and sell the collateral to protect their investment and help repay the loan. Common types of collateral include land, business equipment or inventory, or business vehicles. Keep in mind that fee simple land can be used as collateral. However, using tribal trust land as collateral can be a difficult and time-consuming process. Please contact us if you'd like more information on this topic because there are a variety of factors to consider. It's important to be aware that lenders will use a discounted value for your collateral. So for example, if you have a piece of business equipment worth $10,000, the lender might only allow you to use $7,000 as collateral to offset the cost of repossessing and selling the equipment should it come to that. The last C is conditions. This refers to how you will use the loan, the size of your target market or how many potential customers you will have, how many businesses you'll be competing with, whether your business and the industry are growing or shrinking, and overall economic conditions in your region and nationwide. When you think about overall economic conditions, it might be harder to get a loan right now to open a campground when so few people are traveling due to COVID. Being aware of current conditions is just something to keep in mind as you develop a plan for funding your business. Now for a bit of personal reflection. Before applying for a loan, it's important to ask yourself the following questions. Do I need a business loan? Am I confident I would be able to repay the loan? Do I know what kind of loan I would need? Have I considered all of my options? For example, starting small and self-funding or bootstrapping my business over time. It's important to talk to multiple loan officers. Different banks will have different loan products and may participate in different small business programs that could be beneficial for you. Find a loan officer you like and get along with. Building a banking relationship is also important. You may want to start by talking to a loan officer wherever you have your checking and savings account.
Now I have some exciting news to share. During the upcoming online interactive session, we'll have a panel of local and regional small business lenders. Each panel member will provide information about their organization's small business loan products, their loan application process, and some examples of successful small business loans. There will also be an opportunity to ask questions about applying for and qualifying for a small business loan. Please start to think about what questions you would like to ask the panel members. Next, we're going to look at action planning and how to move your business startup or expansion idea from where you are today to where you want to be. Action planning is purposefully setting goals and then developing milestones and action steps needed to achieve those goals. As this graphic shows, a goal may have several milestones, and each milestone may have multiple action steps that feed into each other to support the goal. If your goal was to run a 10K race, you probably wouldn't sign up for the race if you've never run more than a mile. You might first run a 5K to help you prepare, or you might start even smaller by deciding to run a mile 3 times a week for the next month. As you begin thinking about formalizing your business startup or expansion goals, it's important to establish SMART goals. These are goals that are specific, measurable, attainable, results-oriented, and time-bound. So while a goal might be to launch or expand your business, a SMART goal might be to launch or expand your business within a realistic time frame, say maybe 6 months or a year, or whatever time frame is reasonable for you. You can think of milestones as small goals to help you get to your bigger goals. Completing milestones fuels you toward success, provides a continuous supply of achievements, and helps you not get discouraged. Just like your larger goal, each milestone should be SMART. So if your goal is to launch or expand your business within the next year, a milestone could be to work with Nick or Madison to complete your business plan within the next 2 to 3 months. Or another milestone could be to secure the funding you need, let's say $2,500, within the next 6 months. Action steps are individual tasks that need to be completed to achieve milestones. Just like goals and milestones themselves, action steps should be SMART. Don't worry if you're still figuring out how all these things piece together. We'll dive deeper into developing an action plan during our next online interactive session. During our next interactive session, we'd also like to take a few minutes to celebrate how far you've come during the virtual SGR workshop series. We'll invite everyone who feels comfortable to share your business or business expansion idea, how you came up with the idea, your pitch, where you are in the launch or expansion process. Have you already launched or expanded? If so, how? If not, what is your time frame for launch or expansion? Your goals and your next steps.
Now we just have a few next steps to complete before our final online interactive session. The first one is to pull your credit report and check to see if there are errors or issues that need to be addressed. Fill out the 5 C's of Credit activity handout and determine some action steps you can take. And finally, before our online interactive session, please come up with 3 to 4 questions for the financing panel. And just a reminder that we're here to help. For any questions, comments, or concerns you might have, about anything we've covered in the Start, Grow, Revive Your Business virtual workshop series. If you're joining us from Fort Belknap or Rocky Boy, feel free to contact me, Nick Dorr, with Opportunity Link. And if you're joining us from Northern Cheyenne, feel free to contact Madison Wilhite with the Native American Development Corporation. Our contact information can be found on the slide and also on the front of your workbooks. Thank you for participating in the virtual SGR workshops. We look forward to seeing you in online interactive session number 8. And before we close out today, we just want to leave you with this quote. It does not matter how slowly you go, as long as you do not stop.